Hi, let's talk about ChemoCentryx. It's a clinical stage biopharmaceutical company that focuses on development and commercialization of new medications for inflammatory diseases, autoimmune diseases, and cancer in the United States. Market cap is currently based on yesterday's uh, trade of share value almost 2 billion. There's a good news and bad news. Trading is currently happening 78% below the site's estimated fair valuation. Earnings are forecasted to grow over 72%, but it's highly volatile share price, significant selling over the past 3 months, and shareholders have been diluted. And as you can see, even yesterday the price dropped pretty significantly down just in a few days. So third of so Monday, almost $50. Currently, 11. So it's pretty high drop. There was earnings updates, and I'm not sure if there's where is the biopharma catalyst. So I think there was the Chemo announces results of the FDA advisory committee meeting on avacopan and ANCA-associated vasculitis. Committee's vote split 9-9 on the first question, and on the second question, the committee voted 10-8 that the safety profile of avacopan is adequate. So there's the drugs that they are in the stages, as you can see, phase 1, phase 3, and another one, cancer treatment phase 1. So there's a lot of it going on here, and upcoming catalysts. So actually it's on the membership, behind the membership. But anyway, market performance, 1 year return almost 50% down in a year. Of course, not beating the industry, neither the market. It's big drop. So I opened here. So 1 month looks like in few days 77%. So that what I mean by highly volatile share price. So thank God there's I can show you currently what could happen to some of the stocks, what I research 6 months. So there's a stable price, and then it drops half year minus 81%. So this is something that nobody, I'm not wishing to anybody to see those kind of losses. It could rebound from there, but I don't know, because as you can see, even it was like 1 year on a stable side, so it's pretty much even growing like a few percentages, and then it drops 83%. But if we open up 5 years, so in the long term, you could be on the positive side, even if the price drops. So if you're a trader, I recommend you to become an investor, because traders could enter the stock at the peak, and there's not so many, how I'd say, not so many moments that you can like fix your profit, because if you enter here $67 per share, how much years you could wait for the profit? I'm not dramatization, doing some drama, but I try to figure out what's on the people's mind when they're investing on highly volatile share price. And of course, if they going to invest, like for example here, less than 1% from their portfolios, and they just wait, they wishing to like X2 double. Okay, this they see 42%, they say, oh, this is pretty much good. Then it drops to minus 67, 76%. So that is kind of risky game, but let's continue to research the stock. So valuation side, yes, currently the valuation, even simple Wall Street showing the fair valuation should be around 127, and yeah, TIRX has, I think, more accurate $33, and 12th month forecast 79. Let's look at the market watch. Yeah, high over $100 and average 58. So there's on every side upside. So I'm not quite sure when the movements drop, but anyway, there's a high volumes going on, and the best moments to buy the share is when there's high volumes, but it's still too risky to enter. If your risk taking abilities allows you to enter those stocks, then yeah, pretty much on your risk. But earnings per share growth is forecasted to grow. The company might become profitable in the year of end of 2023, and yeah, the past performance, annual earning growth decreased by 11%. The company is unprofitable, unfortunately, and yeah, so yeah, they do actually have sales, and the shares outstanding keep increasing. Total sales not so stable, but anyway, last 12 months almost 70 million, which is pretty good. So let's have a look on the financial health side. A little of depth. Yeah, they raised some capital. See here, and yeah, if we look here, shares outstanding. So I think, yeah, they pushed some shares out and made some cash from it. Currently, yeah, 376 million of cash, 24 million of debt. The equity is well covering the debt level. Debt to equity ratio is 6.8%, which is very good. And yeah, the company does not pay dividends, and insider tradings recent insiders transaction. So there was only sellers. So yeah, some company have been selling the stock in portions, and yeah, there was two individuals that have been selling also max price around $60. And ownership breakdown: institutions 71%, public companies 17%, VCP affirms 6%, insiders 4%. Let's have a look on the top shareholders. BlackRock increased, Vanguard increased. Is, yeah, unfortunately the last reporting holding date is last year, when the price were around 61%. But fortunately the simple Wall Street does not have so fresh data on on the top shareholders. So if anyone from my subscribers know where you can find these numbers, like fresh numbers, so you can comment that. And by the way, thanks for watching my videos, thanks for subscribing to the channel and liking the videos and also commenting. So I read mostly every comment that you have been writing, and on my side I try to answer it. And yeah, let's continue on. So yeah, there's a, like I said, highly volatile share price, but the positive side that they do have first of all total sales, which is very good, and they do have like many drugs that you see here on the screen that so for example, like December 21st accolade did not meet primary endpoint May 18th, and the cancer drug pipeline phase 1 trial to be inhalated 2Q 2021. So usually the companies with that kind of, I think they are pretty volatile, but still, like is this, I think it could not drop less than these numbers. So yeah, 28%. Anyway, let's look at the investing.com summary of the stock for long-term investors as a strong sell. And yeah, I could answer the one of the questions. So stock talk with Bailey. I've been holding 700 shares since $12 a share. Should I increase my shares and lower my average? There was you have, so let's have a closer look on that. So he have holding 700 shares since $12. So this is pretty like particular, like yeah. So there's a guy that have been buying the stock from the $12 per share. So for example, it doesn't even matter where he brought. So $12, and yeah, you're currently down 55%. I had some of my positions, like I said, not so much, but minus 30, 35, I remember. Currently it's minus 10, but it grows, thank God. But yeah, these games are pretty volatile. So the best way is, like I said in my previous videos, by averaging. You should averaging your portfolios shares. So if you buy one of these, for example, $12, you have the minimum diversification that I recommend is like, for example, five companies, 5 shares or 5 companies, and try to equalize them. So if you have, for example, 10 companies in your portfolio, each of the stocks is owned by same proportion. So you're owning, for example, if you are investing like 10,000, you should buy whenever the stock at the 1,000 amount. So once you bought it, the shares are equal 1,000, 10%, 1,000, 10%, and so on. And whenever the price drops for some of the stocks, and the another stock is going up, and you see like top one increased by like 5%, and it evaluates then like 5% more. So 1,000, yeah, so it's $50 plus, and 1,050. But if some of the stock decreased by like 5%, for example, then the valuation is already, how much is it? I think it's yeah, it's 950. So if your risk-taking abilities allows you, and if there's a high belief that the share price could go up, but I kind of not remember, so let's check it out. For example, add new holdings. So there's good side to analyze the stocks. For example, AgEagle, we added. Let's have a closer look on this one. Shares outstanding hugely increased, 10x. Yeah, of course, the total sales increased almost same amount, but this is this is highly volatile and kind of risky to invest in those stocks. I prefer, first of all, building the portfolio from these stocks. If we open 1 year return, these stocks, like, first of all, for example, the good diversification is 10 stocks, or you could buy the ETF. But if you're willing to pick the stocks, try to perform better than the S&P 500, you can build your own. So these stocks are kind of not so volatile, as so it's pretty small risk to gain those numbers, like minus 70 or 60%, because they're pretty big and they have like stable business in real life. And yeah, so first of all, you're building for this. If your risk-taking abilities allows you to buy more, of course you can make the average less, because whenever the price is going then once back again, you could profit of it. So it's stock market. So if you are entering, for example, at $3 per share here, the next month $4, next month $10, next month like $15 even on its peak, then it drops back. You buy here at 8, at 6, at 6, at 5. But you should really know that if there's a bankruptcy news or something like very, very negative, which made the stock price go down, so usually the drops does not go from nowhere. Yeah, there's a manipulation going on and so on, but there are bad news behind, or not so good news, or there's a deal failed or something, they lose the distribution, or the some of the issues with law and so on. That there could be like drops to 40%, 50%. But of course, if you're believing in the company, you research by your own abilities and look and analyze what they say. And for example, this is pretty good. So if we enter the tip rank, it doesn't have the price targets, unfortunately, but let's check this out. Investors, stock investors, hold, and there's a bullish news on this one. Insiders, I like to look at the hedge funds, and he's not recent hedge funds data, which is not so good. Earnings, EPS near to zero. Yeah, earnings minus 3 million. So it's kind of risky because they're not even earning. So all companies from S&P 500, all of them are earning, and their earnings are on the positive side. So this is basically very good thing to pick the stocks from S&P 500. They have real business that is making money. But if you look for this, there could be some of the future, yeah, it could fly high. I mean, the share price from the $3 to, yeah, even like 400%, 300%, and so on. But yeah, always try to minimize your risks. Always. If you're on negative side, don't sell on a loss. Just add some of the high quality stocks. Watch my channel, what I recommend, and so on. But anyway, thanks for watching this video. Subscribe to the channel, like the video, and see you in a future one.